Hello, today I want to talk about labor market conditions. Obviously, the coronavirus pandemic ransacked labor markets across the globe. I do think we're nearing the end of the pandemic, or at least we can see the light at the end of the tunnel. Hopefully, that translates into better labor market conditions. Now, one place to check to see if that is in fact true would be the BLS, or the Bureau of Labor Statistics. Check out their JOLTS data, or their job openings and turnover survey. Now let's go ahead and take a look at some of that data. Let me say from the beginning here that this data goes through February 2021. There is a bit of a lag. So we are here in May. We're only able to see the data through February of 2021. In terms of job openings, we have rebounded sharply from the lows we saw in that March, April timeframe of last year. Not as high as we were kind of in October of 2018 and the peaks we can see there. We can look at the rate of change in terms of job openings. Now, this is at an all-time high. Given how bad things were, it's not surprising that kind of the comps are fairly easy, but it's great to see ourselves at all-time highs versus kind of that dip we saw there again, March, April, May of last year. We can look at hiring that companies are doing. We saw a big decline when the pandemic started, to be followed by a giant rebound here, May of 2020, 6.2%. But again, the comp was so bad, it was pretty easy to meet. But we've still kind of seen numbers above trend line for quite some time. And then now finally bouncing up there a little bit at the end in February. There is the turnover rate. So this includes layoffs and quits anytime someone leaves, regardless of whether it's voluntary or not. This is total separations we're talking about here. Now, if it goes back here, March and April, it's off the chart here. I reduced the scale so you could see the trend line better. You can see the detail a little bit better, but we saw, numbers, huge numbers there in terms of total separations last year. Here is quit rates, or as I like to say, the take this job and shove it rate here. We can see that we saw last year, March, April, May, these numbers were very, very low. Not surprising given what was going on. People were looking for jobs, so a lot of people weren't quitting. There probably is some numbers in there though that reflect people that just were afraid to be in the market force, so they quit voluntarily. That's why we see some positive numbers here. Now, all of these numbers here are below 2%. The last time we saw a number lower than 2% was in 2015, July 2015 at 1.9%. We can look at layoffs again. This goes off the chart here in March and April of last year, 8.6 and 7.2%. Again, because of the pandemic, lots of people being laid off, quickly rebounds because companies were like, hey, we need to do business. So that's kind of where we are there, layoffs. Now, we did see kind of a pop here in November of last year, which is a little bit interesting here at 1.5%. The last time we saw a number like that, ignoring the crisis period in March and April, was back in 2012. So things are better, currently looking pretty good here in February. But things, aren't 100% perfect, but things clearly are moving in the right direction. And that's the point here, right? So I think we're going to continue to slowly see more and more upside in the labor market. Things are going to get better and better. I think the most recent report we saw out there, which I'm not referencing today, was things weren't as good as expected, but they're just going to get slowly better and better and better here as more and more people get vaccinated and, the infection rates go down. Thanks so much for listening. Hope you enjoyed that. I'm Brian Kozlowski.